Miami Condo Mondays is a live podcast on the first workday of the week at 4 p.m. South Florida time. The program features former journalist and current Wall Street consultant Peter Zaleski of the Miami Condo Investing Club and former lender and veteran condo broker Jenny Huertas of CVRLP.com. Recorded weekly in greater downtown Miami, this one-hour discussion will provide a refreshing and sometimes controversial perspective on the state of the South Florida condo market from a pair of seasoned real estate professionals who do not always agree. The program won't tell you what to think about the South Florida condo market, but will give you something to think about before buying, selling, taking listings, or financing units. This podcast is not authorized by the Miami real estate industry and will quite possibly annoy many of its figureheads. Welcome to this week's episode of Miami Condo Mondays, broadcast live on the Substack account of Peter Zaleski.
Happy Monday. How's it going? This is Miami Condo Mondays. I'm Peter Zaleski. I'm the founder of the Miami Condo Investing Club. I have with me Jenny Huertas. She's the broker owner of CVR Realty. We're two veteran real estate people down here in the South Florida area who talk straight and give you inside information. I don't know if it's inside information, but insider type of information about what's going on in the marketplace. We do these at 4 o'clock. Today we are on Miami time. It's 4:15 when we're getting started, so we're a little bit late. But as anybody who lives and works in Miami knows, if you're less than a half an hour late, not even worth giving a call. So that being said, let me go ahead and introduce Jenny Huertas from CVRRealty.com. What's going on, Jenny?
Hey, happy Monday, Peter. How are you?
I'm doing well, Jenny. We're going to be talking about Sunny Isles Beach today. We're going to dedicate an hour basically to this marketplace. We'll get into some other topics, but primarily Sunny Isles Beach is what we're focused on. Why are we focused on Sunny Isles Beach, you might be asking? Well, simple reason. We just came out with a ranking of January through May, the best condo markets in the tri-county South Florida region of Miami-Dade, Broward, Palm Beach County, as well as the worst. And I will tell you, Sunny Isles Beach is the worst. We'll get into some of the details. Jenny has sold some condos up in that marketplace. She recently took a ride around Sunny Isles Beach. She's going to give us her take on it. We're going to give you some stats. We'll give you some straight talk. And basically, at the end of this podcast, you should have a pretty good sense of what's going on. I tend to be more on the bearish side. Jenny's more on the bullish side. So it'll be up to you to sort of determine which side you're on. So we'll give you information to think about. We won't tell you what to think, and that'll be up to you. And I will mention, the 4 o'clock time start is kind of what we're focused on. Why? Because some of you might be on the train going home. Maybe you're in the car stuck in traffic, or maybe you're sick of listening to your boss. You got one more hour to go, and this is a great little diversion. So instead of putting on that 1980s music while you're stuck on Interstate 95 heading north, why not tune into us? So every Monday we're doing this podcast. Holiday Mondays, we'll have to see whether or not we do. We'll give you advance notice, but as far as we're concerned, 4 to 5 p.m. Eastern Standard Time every Monday. Jenny, did I miss anything?
No, so good to go.
All right, let me give you a real quick ad. The ad for this week is I am doing a walking tour, doing it of the Brickell Avenue area of Greater Downtown Miami. This is primarily the premium sub-market of the Greater Downtown Miami condo market. About 100 towers there, somewhere in the vicinity, 40,000 units or so. 35,000 units or so. We're running the stats this week, and then on Saturday from 10 to 1/1:30, we're going to do a walking tour, about 4 hours. We'll be wandering around. We'll have some stops along the way. It'll be a moderate pace. You're going to sweat, but you're also going to laugh. You're going to get your steps in, and I'm going to teach you how to analyze buildings. I like to say when you go out looking for a condo, don't focus on the unit until you can focus on the building. Way too many buildings to choose from. So eliminate, get down to the buildings that make sense fundamentally to you. And then at that point, drill down and pick out the unit that might actually be your next investment. Jenny, correct me if I'm wrong. What do you think of that approach? Building first, and then you find a unit. What say you?
Yes, most definitely.
Wow, we're agreeing. That's 2 in a row. Let's see if we can go for 3 in a row. Jenny, before we get into the Sunny Isles Beach condo market, we're going to look at condos. We're also going to look at the vintage condos, which are those units 30 years or more, which are at the greatest risk as a result of legislation that followed Surfside. We'll look into the rental market too. We'll give you some perspective. I like to talk about the 1% rule, which means for every $1,000 of rent you get in, that's about $100,000 of value. Jenny says it's not necessarily a given that that's how it's going to work. But I will hit you with those Sunny Isles Beach numbers. But Jenny, before we get into that, tell the audience about your trip. You headed north this weekend. How'd the trip go? What were the airports like? A lot of questions right now about when you're going through an airport, especially Miami International Airport. There's all kind of immigration issues. There's all kind of fear. There's all kinds of other stuff going on. So what was give us some context.
Well, if you travel on Saturday morning, it's super busy, the airport in Miami. So really, really, even if it's a national flight, just go 2 hours for a national, 3 or 4 hours for the international. I went to North Carolina, so it was in the country. I went to Raleigh, and you go there, it's like chaos in Miami, and then you go to this airport, which is so zen, and nobody speaks on the microphones. It's pretty cool. Actually, it was relaxing, and it's beautiful there. And it's good for a change. Here it's beautiful too, but it's just like chaos here, and it's just there. You want to relax and breathe the clean air. It's just a beautiful place to go.
What about pricing, Jenny? How was pricing in North Carolina compared to Miami? Walk us through some of the basic stuff. Did you go out for drinks? Did you go out for a meal? How much was an Uber ride from the airport? Give us some context.
I didn't take an Uber because I went to visit friends, but I spoke with people there because there's a young couple that is looking for a place to buy, and they bought a house outside the city. And on 2020, when the interest rate was very low, and on 2022 they sold the house because they say we are not ready for kids. Let's try to live in downtown Raleigh because it's sports happening there in their late 20s. And they did good selling the house in 2022, and now they're renting. They're renting for the foresight future because the interest rate, they cannot or want to invest right now because they're definitely waiting for the prices to be corrected. This is not just a phenomenon for us here in South Florida, is nationwide.
Really? So there's some pessimism up in North Carolina about the possibility that there might be a pullback in pricing. Now, are you talking single family houses? Are you talking condos? And also too, did they tell you anything about the rental market up in Raleigh? And hey, correct me if I'm wrong. Isn't Raleigh part of the Research Triangle where there's basically 3 communities?
Yes.
They all have universities. They have high-tech type of business and work going on there. And as a result, there's a lot of demand, and there was some real appreciation and value, especially since the pandemic years.
Yes, the prices there for rentals. This couple lives in the middle of the city, like compared to downtown Miami. They were paying for a 1-bedroom, $2,200, which was like us 5 years ago. And but for them, it's not. It's not affordable. Remember, it's just I'm not sure they make the same money like the executives make here, but they consider that 2,200 is still good for them to thinking, oh, I'm losing 2,200 every time I pay rent. As opposed to buying. They say with this rent, both of us working, we can wait to the prices to go down to buy a house when we're ready to have kids. Because that's the only reason why they would buy a house is because of schools and things like that. And for example, I asked them how much is a dream house for you, close to downtown Miami, from downtown Raleigh, and they say, well, the houses we like for us, they're not below $1 million. So they are expensive for the market price. So they're gonna have to either make more money and live in the dream house close to downtown, or go to the suburbs. It's almost the same in that sense, only the scale is different.
That's interesting. Wow. $2,200. You said that's an old price? To me, $2,200 seems like it should be the real price today. How much would be it's $2,200 a month. How many years ago was that? I must really be out of touch.
5 years ago. 4 years ago. 4 years ago.
4 years ago. Wow. As the market has changed, there was a Wall Street Journal reporter who, and maybe some of you heard his story, interviewed me for a piece, and I was throwing out some stuff a couple years back, and she told me that I was old and things had changed and they were different this time. That's why I'm really sort of, I'm wondering when I hear the rents you're talking about, Jenny, I'm wondering if I've really changed or whether or not this was a spike and now we're going to start to pull back, which could be a good segue in the Sunny Isles Beach in that marketplace. But go ahead and answer that,
Right.
Jenny. Am I old and am I out of touch, or was that simply a spike and we're on our way back to kind of where I'm standing?
Or you're not old. The numbers don't age.
Okay.
Numbers don't age. Stats are stats. That's the bottom line. When the condos here were renting for $2,200, the condo price was about $300,000. Just to give you
Okay.
context. Now, if you rent a place in downtown, then it's about $3,500, and the units are trading for high 500s.
Got it.
So there you go. I think the rent is determined by the value of the property and obviously the demand.
Got it. Jenny, you ready to talk Sunny Isles Beach? You ready to get into it? All right, here we
Yes.
go. All right,
Yes.
fantastic. So let me give you a little background before we get into Sunny Isles Beach market. We'll tell you how we came up and we ranked Sunny Isles Beach as the worst condo market in the tri-county area of Miami-Dade, Broward, Palm Beach County. January 1st of this year, it was New Year's Day, and we went ahead and we launched what we call our Miami Condo Cliff Index. It's an index that we've tied to effectively what we called in June of 2024, the year of Florida Condo Association Financial Cliff, 2025 Florida Condo Association Financial Cliff. What does that mean? What is that all about? Well, what that means is as all the legislation kicks in place as a result of the Surfside condo collapse back in June of 2021, there was all kind of legislation passed, primarily forced by the insurance companies. Insurance companies said, basically, if you don't make these changes, Florida, we're not going to insure anymore. And because we don't have state income tax here, the state simply followed everything that was being requested, at least much of what was being requested by the insurance industry. And as a result of that, we now have inspection requirements. We have inspection requirements that also, too, at the end of them, and keep in mind, the inspections are done by licensed architects and engineer. At the end of these inspections, the ballpark figures are given out as to what needs to be done, as well as, more importantly, how much is it going to cost? And now you're being forced to reserve, meaning put money in reserves in anticipation of paying for the work that maybe is due a couple years in the future. So as a result of that, maintenance fees have gone up, special assessments have kicked into place, and then we had all the insurance increases that occurred primarily because of Surfside, because of the hurricanes that have hit the west coast of Florida. So basically all costs have gone up, and now it's a situation where a lot of people are getting priced out in terms of they own their unit. Maybe it's free and clear, but now the cost to carry it, that maintenance fee, that special assessment, and that insurance is making it really cost prohibitive for some. Keep in mind with a special assessment, and this is a ballpark figure that we're throwing around, that we haven't studied it yet. There's not enough data to study it yet, but anecdotally, we're seeing if the building you're in is 3 stories or less, assume you're going to have a $25,000 special assessment. If the building is between 4 and 13 floors, so there's not really a 13th floor in South Florida, so it'd be 12th floor, you're probably looking at $50,000 to $75,000 special assessment, and then 14 stories or higher, probably looking at $100,000 or so. Ballpark, rule of thumb, anecdotal. Why the difference between the number of floors? Well, as developers start to build a certain height, more stuff is necessary. Foundation, in terms of the mechanical, the electrical, the plumbing, all of that type of stuff. But basically, that gives you a figure: 25 grand, 50 to 75, or 100 grand a door. All of that has really risen or contributed to rising prices of maintenance fees. Jenny, real quick, what's a ballpark figure that the audience might be able to rely on? If you're on the mainland, what's the going rate price per square foot monthly for a condo? And if you are on the barrier island where Miami Beach, Sunny Isles, other places are located, what would be the maintenance fee? Just ballpark, not to hold it to every building's different. But before, it used to be like 75 cents a foot on the mainland, $1 a foot on the barrier island. What is it today, best you know?
I think it's over $1 on the buildings in downtown, and on the beach, I'm expecting more 150. Obviously, depends on the building and the amenities, because we're talking about smaller units in the 50s, and these Art Deco units. Obviously, they don't have parking, they don't have pools, they don't have anything like that. So over there, it's obviously cheaper. Probably, I don't know, 30 cents of the dollar on these little buildings. But that's a completely different. We cannot, comparing is a little difficult because they are completely different products.
But is it safe to
yes,
say though that is it
ballpark.
safe to say that rising prices or rising fees due to special assessments, maintenance fees, as well as insurance is creating a real burden for condo owners, even if they've owned their unit free and clear?
Yes, absolutely. And therefore the rents are higher because if you have a maintenance fee of $1,000 where you used to pay $600, it's $400 difference that you had to pass it to the consumer. So that affects too. It's just not just that the prices are going up, also has to do with the maintenance.
Great point. So let's go back to our index. So we create this index to track everything that's coming. We had called it in June of 2024. Lo and behold, it's here. What do I mean by it's here? Wall Street Journal came out with a report in April, basically calling a cliff as well, reinforcing everything we had predicted a year ago now, if you could believe that. And then last week, Tomas Regalado, he's a former mayor of Miami. He was, I think, 2 terms in a row, and he got term limited out. Then he went for property appraiser, just got elected. He held a press conference, and what he came out with was the numbers that the county, the cities, and the school board are going to use in order to put in place taxes for the next year. Remember, when they come out with the taxes, they'll give you a discount to prepay beginning in November. So they're in the process of putting it all out. And what Mr. Regalado had said is that while the values overall of properties in Miami-Dade County are on the increase, condo prices are starting to come down. He highlighted markets like Miami Shores, which would be that Biscayne Boulevard area up there just north of Miami, Miami city limit going up towards the Aventura area. He hit Aventura. He said North Bay Village. He also talked about Coral Gables. A lot of the places that we're tracking in our index and identifying weakness in problems. The property appraiser, Mr. Regalado, he came out and hit it. So I like to think it gives us some confidence in what we're seeing with our index. Do you have any thoughts on that before I continue?
No, that's really interesting that it actually is Vox Populi now. Everybody knows. And it's official. It's like somebody say officially, this is really happening. Because before everybody talks about it, oh, I bought this condo. Now I have friends that bought a condo for investment in Coral Gables, and now they have a huge assessment. And even the rent, she's forced to subsidize the rent for the person that's living there because the market for rental in that place is not more impossible to get more money. So yes, and selling it neither because the special assessments are so high that nobody wants to walk on it unless the price goes really down. So she's preparing herself to get a haircut or a hit on that investment.
Wow. Well, and there you go. If you're a buyer, your time might be coming. If you're a seller and you want to get out, you might want to seriously consider taking a bold step to reduce your price to something in which the condo will sell rather than being simply stuck with the crowd and basically getting taken down as everybody else gets taken down. So I think that's kind of the point Jenny's making. So to wrap it up and how we get to Sunny Isles Beach. So as part of our index, so we started on January the 1st, we told you why we started it. We told you how the market is sort of coming back to us related to what our index is showing. What we're doing is we're taking active listings and we're taking pending sales. We're combining them, we're multiplying them, we're coming out with a number. And this number is apples to apples. We're able to compare it for 23 markets in the Tri-County area. So one of the markets will be South Florida. Another 3 markets, one will be Miami-Dade, the other one will be Broward. And then finally we'll have Palm Beach County. And then the rest, we're going to carve out into submarkets. Like Coral Gables will be a submarket. Coconut Grove will be a submarket. Miami's Upper East Side will be a submarket. Delray Beach, Boynton Beach, Pompano Beach, all up across the board. And every week we're updating this to get us a sense. So as of the end of May, we ran the index and we ranked the different markets to see who was the best and who was the worst. And we talked about it a little bit last week. So let me just refresh you before we get into the worst market being Sunny Isles Beach. And this is based on the index. So reading overall in South Florida, average is coming in about 7.18. It's simply our formula that we came up with. The lower the number, the worse the market, meaning activity, buyers in the market. Listings are too high, not enough pending sales. all the stuff you want to watch for. Remember, because when you look at closed sales data, that's what happened a week ago, 2 weeks ago, a month ago, 3 months ago. What we're telling you is what's happening right now, because we're using active listings and we're using pending sales to kind of monitor it. Much like the stock market will tell you kind of where we're going in the future of the economy, and unemployment tells you where we were. Closed sales data, in our opinion, is like where we were, and our indices, because we have 23 of them, they're telling us where we're going. This is like real time type of situation. So overall, South Florida average 7.18. And I should tell you, this is all condos in Miami-Dade, Broward, Palm Beach County. This includes old as well as new, anything that's sort of out there. So 7.18 is the average. And on the good side, like we mentioned last week, Coconut Grove in Miami is the best, coming in at 15. Then you had Miami's Upper East Side coming in at 11.75. Fisher Island coming in at 10.53. Boca Raton coming in at 10.37. And Key Biscayne, 10.24. Now let's drop all the way to the bottom. And what we got at the bottom is right up there in that barrier island in Northeast Miami-Dade County, a community that used to be known for all like schlocky, kitschy type of hotels, 2 stories high with crazy themes related to it, whether it was Montreal barbecue or Sahara or anything else, where they went at camels and it almost looked like a Christmas type of theme. You know how you see like the nativity scene? It kind of looks like that. But you had all these schlocky little hotels, many of them condo hotels and hotels, 2 stories. They gotten taken down and replaced by 50-story towers or so, 60-story towers. So they're now coming in the worst. Remember, 7.18 is the overall South Florida average based on the index. Coconut Grove's coming in at 15. Where does Sunny Isles Beach come in? 4.12. 4.12. But Sunny Isles Beach is getting overwhelmed with listings and nobody's buying, according to the index, in terms of pending sales as well as active listings. And I'll get into some of the closed sale data just to give you context. But for context, what is the second worst market? Hollywood, Hallandale Beach, which is immediately north. And number 3, Aventura, which is immediately west of Sunny Isles Beach. So, Jenny, your perspective about Sunny Isles Beach in general, and then tell us a little bit about what you saw. You took a ride up there. Your office is in Greater North Miami. You took a ride up to Sunny Isles Beach. Give us your first reaction about that market and whether or not our rankings are completely out of whack, or whether or not you might actually see some value and some accuracy in what I'm telling you.
Well, when you speak about these markets that are going down, I just noticed when you were talking what they do have in common. And this is interesting because Sunny Isles, inside this submarket, there are 3 little submarkets. One are the luxury row, that are where the old motels, the motel lane used to be called in the 50s. And still let me tell you, still the camels are there. The Sahara is the only one that's standing there.
So Jenny, explain it. So you got A1A, which is now called Jimmy Buffett Boulevard. So A1A separates on the east side is the sand in the Atlantic. On the west side, you got like Pollo Tropical, KFC, and Publix, and then some old ass condo buildings in and around there. Am I getting that right?
Yes. So everything that is on the sand is luxury, except for a few of them, like Sahara, which is still actually is like a condo hotel. And I was searching for curiosity about like to see what it's like, and it has like 0 stars, and like the people complain that it's terrible and terrible. But you gotta stay there for $100 a night. So go figure, right? But so that part is super luxury, except for that. And then when you go across the street, just across the street, a lot of these buildings, only there is an exception of 1 or 2. Aurora is one of them that are new, but the rest are from 1970s or below. And what happened with that barrier island is not that wide in that part of the county. So you have the beach, you have the old product across the street, all the way to the intercoastal. And then you have north of it, close to Golden Beach, then you have single family homes that we're not talking about here, but it's interesting for you guys to know that this Sunny Isles has 3 different sort of product. So, and also you take a look at Hallandale, same thing. everything that is on the sand. They're knocking down buildings and making brand new product like 2000 Ocean, for example, and then they're really trying to gentrify that area as well. And they also have on the other side, they have all these other condos as well as Hollywood. So these types of markets have similarities, and as you realize by having this conversation with you.
Yeah. And Jenny, talk about Aventura a little bit. Aventura's on the mainland. Sunny Isles is on the barrier island, and Hollywood Hallandale is on both. So the Hollywood and the Hallandale, it's two separate communities, but we kind of combine them into one because it's very difficult to kind of tell the difference. They kind of feel the same, although I'm sure the government leaders in Hollywood and Hallandale would push back. But generally speaking, you can't tell the difference basically between one and the other. So, but the both of those communities, they go on the mainland as well as the barrier island. In my opinion, Sunny Isles Beach is going to have the most expensive oceanfront stuff. It'll have the biggest disparity between the height on the ocean side of Jimmy Buffett Boulevard or A1A and versus the stuff on the west side. You get into Hollywood Hallandale, they're going to be more similar. Aventura on the mainland, it's going to be sprinkled in with like older product, more mid-rise product. That's where the mall is, remember. That's where you got some office buildings. And you do have two causeways that kind of take you both in between, effectively Aventura on the mainland and Sunny Isles Beach. So am I getting that right?
Yes, but the difference with Aventura is that when the barrier island, Aventura, where Aventura is, the bay is bigger. So you have more waterfront in Aventura. On the mainland side is very close to the beach, but you have lots of water. So there is a lot of condos that were built on the intercoastal where it's wide open, and that's why you have so many condos there.
Got it. And if anybody's out there listening or watching and you're wondering, you're like, well, I heard of this place called Williams Island. Where the hell is Williams Island? Williams Island's actually in Aventura. If it was in Hallandale, it would be cheaper, but Williams Island is a gated community that's located within Aventura. It's sort of an island. It's sort of not an island. There was some dredging that went on around there back in the day when I think it was Donald Sofer. He was the one who was involved with pushing it forward. City of Aventura, it basically was unincorporated for a long time. Late 90s when the county, Miami-Dade County, tried to get all of these municipalities to form their own entities so they could operate their own services. Many of the residents wanted to do that, so that, they were paying all this money in property tax. Remember, when you pay property tax, 2% annually based on the value. A third goes to the county, a third goes to the school, and a third goes to the city in which you're located. So there was this big movement in the 90s to have these communities create their own vision and manage their own affairs. Sunny Isles was a perfect example. Aventura was a perfect example. But basically, Aventura was created by the gentleman who was involved with Aventura Mall. Aventura Mall, involved with the Fontainebleau over there on the beach. And there was a series. I don't know if it was Max or HBO. I think they're the same now, or Cinemax or one of them. But there was a show called Miramar, and that was actually based on that family and the Fontainebleau Hotel, which is over on Miami Beach. But that was back in the day when they created it.
Mm-hmm. Yeah, that's great to give context to the people that are listening to us, because that gives you like a visual without seeing it. So how these communities are formed. So therefore, the prices, the disparity, as you say, is huge. It couldn't be bigger in just a few blocks away. It's amazing.
Jenny, tell the audience, in terms of like, if you're in the market for a condo, why should you look at Aventura? Why should you look at Sunny Isles? And why should you look at Hollywood Hallandale? What are you likely to find if you're kicking the tires? Because these three, they are the worst in all the Tri-County area, worst coastal condo markets. What are you likely to find when you get up there? Because, I know you're working with a customer or a client, and that client is interested in Greater Downtown Miami or the beach area that you brought up, Hollywood Hallandale, because they keep seeing these headlines, these reports I'm putting out, and I'm like, the prices are falling and this and that, and they're like, oh, where is it? And you know, some people want to stay around greater downtown Miami. Maybe they want to stay at Miami Beach. They don't want to schlep up to Hollywood Hallandale, which is located between Fort Lauderdale and city of Miami. And right there, Hollywood Hallandale, Sunny Isles, and Aventura. So Jenny, give the audience an idea. What's the typical profile of the product type?
Yes, there are investors that don't mind to get their hands dirty as far as buying something real cheap that is falling apart. There is there is actually a building that is actually, I think, the most activity in Sunny Isles right now as far as being active and closing. Why? Because it's in the $200,000
for
range.
A unit. 200,000 a door.
Yeah, but that's still like 350 square feet. It's like a condo hotel. But it's well located. Even if it's falling apart, people actually, I don't know, they see value on that because it's renting. So it's like a ugly store that actually sells.
But okay, so let's go to the 1% rule again. 1% rule. 1 month of rent needs to represent 1% of the value. $1,000 in rent means you need to get. That means you got $100,000 place. So Jenny, these places for $200,000 a door. What are they renting for? Ballpark.
It's a condo hotel. So yeah, I think. I mean, the maintenance is pretty high in these places, and also the management. But I think you can make the 1% rule for there.
There we go. I keep hearing from everyone in the industry. You can't make the 1% rule work. It doesn't work. Blah, blah, blah. You're telling me that this is an example where if you buy correctly, it might actually work.
I say it might.
It might.
I didn't say it.
But that's the point of the 1% rule, to be able to eliminate and find situations where the numbers might actually work. And then if you find a building where they might work, then you sit on the sidelines and you wait for the units to hit the price you want, especially if we're in a downward cycle, which I tend to believe we are.
Yes, but you have to be aware that these places has to be a sort of condo hotel where you're taking a risk because you don't know what's going to happen with that structure. And the 1% is a high risk in that sense. When I'm talking about a 1% that doesn't exist, is for regular places where people want to live. Has to be a condo hotel or Airbnb in order to work. Hey, by the way, you told me in the last podcast, yes, I had a 1%. But you didn't tell us. You didn't tell us anything about. We forgot.
So last week on Miami Condo Mondays, remember we do them every Monday at 4:00 or so. Today we were a little bit on Miami time, so we're running 15 minutes late. But the idea is to go from 4 to 5 every Monday. So last Monday, I brought up the 1% rule again. $1,000 a month rent represents $100,000 of value. $1 million condo means you need $10,000 a month rent. That's something I stick to. That's fundamentals. If you want to go ahead and make a decision outside of that, that's solely on you. But if you want to try to buy fundamentally, that's something that can at least help you. And again, it doesn't mean it's going to be perfect, but it's a back of the napkin approach to be able to eliminate some of the noise that's out there because there's so many buildings. So why not eliminate buildings that don't make sense and focus on the ones where they could make sense? This is where the 1% rule kicks in. Again, $1,000 a month rent means $100,000 of value. So last week we were talking about the building in greater downtown Miami where it actually worked. Because remember, I was doing a tour and I was prepping the numbers and somebody on the tour asked me, walking tours. And by the way, if you want information on walking tours, go to miamicondo.club, miamicondo.club, or you can buy tickets directly, miamicondoclub.eventbrite.com, miamicondoclub.eventbrite.com. So the building where the numbers are making sense is the Opera Tower. Opera Tower is going to be located about 17 Terrace, just east of Biscayne Boulevard, right in there across from Margaret Pace Park. What you'll find in Opera Tower is you're going to have, I'd say, pizza slice or pie slice designs. Many of these units have no hallways, which within the units, and that's something you want as an investor. You don't want wasted space. You want them nice and tight. You fit everything in there, and a renter's going to pay what a renter's going to pay. So if you can rent a place that's smaller for the same price as a landlord that rents a place that's bigger, you're going to obviously get a better return. So when you're looking at the numbers, Opera Tower is a building I would encourage you to sort of take a look at if you're in greater downtown Miami. Now, another thing they kind of respond to the criticism I'm going to get, which is like, yeah, but you would never live there. And that's the point. If you are an investor, rent a place that's going to throw off cash. And then what you do is you take the money you're making and you go rent the place where a landlord is subsidizing you, because a one bedroom is 1,200 square feet and they're losing their behind on it. While meanwhile, you're making money on Opera Tower or something like that. You got cash coming in. Then you go and you rent from somebody who's paying a subsidy on behalf of your benefit and your quality of life. So that would be the argument I would make. Opera Tower, Jenny, any quick reaction before we go back to the Sunny Isles discussion?
Yes. When you talk about when you talk about the 1%
Yep.
rule, it seems like it could work, but something that we don't know is all these expenses behind that
Well,
rent.
yeah, but again, though,
Because you have-
it's back of the napkin. This is something I should roll up my sleeves and actually spend time to study, analyze, and then maybe go see. But going in, if it's way out of whack, you know you're going to be upside down. You're going to be underwater.
Right.
So why waste the time?
Yeah, no, exactly. But also be aware of how much it costs you to carry that property.
Okay, so we've
That's the
agreed on
point.
a few things today. There's one we disagree on. She does not like that 1% rule. A lot of people in the industry don't like the 1% rule, but
I like it. It's just like it's not feasible.
well, it's not feasible until it's feasible.
Okay, all right.
All right. All right,
Fair
Jenny.
enough.
So we were talking about the rankings, and Sunny Isles Beach comes in. They're the worst market in South Florida based on our numbers from January through May. And just to give you context, when we first launched the index in January the 1st of this year, Sunny Isles Beach came in at a 5.07. The South Florida region had an average of 6.85. So January 1st, South Florida 6.85. What's South Florida today? 7.18. Sunny Isles back in January 1st, they were coming in at 5.07. Where are they today? 4.12. So you can see that market is getting weaker and weaker. It's actually down 19% in 5 months, to give you a telltale sign. Jenny, sometimes what happens is people list their condos. Remember, we're tracking active listings and pending sales. A lot of people will list their condos for the winter buying season, which we define as November through April. And then most listings are 6 months. And at that time, you start to see people roll off. They don't renew the listing. Maybe they do. But a lot of the activity in terms of transactions, it's probably it might not be as strong as it had been, because a lot of people looking, they search January, February, March, then they begin to close in April, May, June. But why don't you give us some context? If you have a market like Sunny Isles Beach that's going down 19% in terms of the index since January, and we're going into the summer, what would be your expectation or your projections going forward for the summer that I'm calling the summer of paralysis by analysis, because of uncertainty related to Liberation Day, stock market volatility, the bond market volatility, and now potentially some sort of crackdown on immigration where the National Guard was called into California,
Yeah.
and there is talk that could spread beyond California. So Jenny, 4.12 today, Sunny Isles Beach started at 5.07, worst market in South Florida. Any reason people should be hopeful, or would you anticipate we're going to continue to see it languish behind the rest of South Florida?
I do almost feel like, when the hurricane is coming, and when you are calm, like in the eye of the storm, and everything is calm and airy, that's the way I feel this market is happening. Like, you're like, oh, I don't know if it's going to be a horrible hurricane and then we're going to rebuild after that, or it's going to move a little bit and miss us. So there is a lot of uncertainty, as you say. It's not just the market itself, it's also the cost. The cost is prohibited, even when we're talking about moderate pricing properties. No, I'm not talking about the 5 million. Those are almost for sure they're gonna do
Yep.
okay, because money brings money. But for the rest of normal people that cannot afford this sort of high end, then it's a question of, yes, I think we're gonna have to wait, because we're gonna have to wait if the interest rates go down a little bit. But I had to report to you that I receiving a lot of creative lending. Like I see investors, people that have money that are actually offering interest below the 6%, like 5.75. And I thought that was interesting. Maybe that was gonna move a little bit, help us to move a little bit more on the activity. If we get
So
somebody.
these are adjustable rate mortgages. I'm assuming it's like a teaser. You come in for a year or two, it's a low rate, and then it's going to adjust afterwards. Because remember, when rates started to go up pretty fiercely, when Jay Powell, the chairman of the Federal Reserve, started raising and try to get inflation under control, a lot of people were arguing, listen, go and buy today. It'll be short term. It'll pull back, and then you simply refinance. So do you think this is a way to try to bridge that gap and get people in by maybe some of these lenders giving a short-term teaser? Now, granted, you got to pay fees, origination fees, processing, all this other type of stuff. But do you think that's what the strategy is, to try to spur on the condo market in South Florida, or just that nationwide?
Yeah, it's our market is always cyclical. And I was in the mortgage business in 2006, 2005. So I saw that. I saw a lot of lenders willing to lend for a very interesting rate for 3 years with prepayment penalty, and the hope that the interest rate go down in order to make it affordable and in order to make the people to qualify. Because if you look at the numbers now, nobody qualifies for a $400,000 or $500,000 place. So I think those are coming back.
Okay, and speaking of not qualifying, let's talk condo numbers in Sunny Isles Beach. Sunny Isles Beach, if you don't know it, it's just going to be north of Hallover Beach. Anybody ever come down to South Florida, and if you're in the nude beaches, Hallover Beach is the place you want to go. I have not been. I hear the demographic might be a little bit on the older side, so that's not necessarily I'm interested in, but Hallover Beach is to the south. Golden Beach, this is where you got all the single-family houses. That's immediately to the north. You got Atlantic Ocean to the east, and the west, you got the Intercoastal. On the other side of that, you got the mainland, which is Aventura. That's Sunny Isles Beach. Jenny, this is what we got going on at Sunny Isles Beach right now. I pulled this stats today, 9th of June in our year 2025. I like that. I heard that on a podcast while I was walking this weekend, preparing for my tours. Again, anybody want to go on a tour this weekend? MiamiCondoClub.eventbrite.com. We're doing Brickell Avenue area of Greater Downtown Miami. So Sunny Isles Beach, Jenny, 1,213 condos for sale. 1,213. How many moved during the winter buying season, which was November of 24 through April of 25? You had a grand total of 320, Jenny. 320 condos moved in 6 months of the winter when everybody was in town. That's an average of 53 condo sales a month during the winter, which just ended in April. That's an average. So if you take the average sales pace of 53 units trading a month, you divide it on what's currently on the market, 1,213, you got 22.7 months of supply. Equilibrium 6 months, less than 6 months means seller has the advantage because they can say, you want it, you got nothing to choose from. When you got more than 6 months, buyer says, I take whatever I want, and if you don't like it, piss off because I got plenty more to choose from. Jenny, 22.7 months of supply in Sunny Isles Beach. What say you? Is that simply a situation where these owners have more money than God and they don't need to sell? Is this a situation where, maybe the pricing doesn't matter and it's all about the quality and the exclusivity of the unit? What say you, Jenny?
Well, since the market is so blended, the overall market is so blended, it's hard to tell where this disparity in numbers are.
Let me stop you. I was ready for that question.
Okay.
So what I did is I carved out the old stuff. Let's call it vintage. Vintage is 30 years or more. This is the stuff that's really impacted by the inspections. The milestone inspection at year 30, as well as the structural integrity reserve study at year 10. So let me carve that out for you, Jenny. So of the listings available, 1,213 available, 44% are vintage. That means 56% are not vintage. And by the way, the vintage units represent 538. How many traded during the winter buying season? Just about 50%. 146 vintage units traded. What kind of average number of vintage sales in winter? About 24 units a month. And how much supply in vintage? 22.1. So overall market's 22.7 months. Vintage 22.1. So all the markets are getting hit by this in Sunny Isles Beach.
Yes, no, definitely. So you're telling me that it's 50, almost 50-50. So 50% of the new and 50% of the older are having the same issue for different reasons.
Correct.
And yes, the price is one. The price is like, if you go to the vintage place, you expect to pay more. To pay way less. And you go to multi-million dollars. There is no, like, the people can stay with those units in the market for 2 years, and they just don't care about selling.
And I'm glad you brought that up. That's a perfect segue. What is the average asking price for a condo at Sunny Isles Beach today? Just under $1.9 million per unit. $1.9 million is the ask. What is the vintage, 30 years or more, the ones impacted as a result of Surfside collapse? What's the average ask on a vintage? Just under $455,000. 1.9 overall condo in Sunny Isles, $455 vintage. So you can see, if you can get a vintage unit that it's passed its inspection, done by a licensed architect or an engineer, and it has an actual report that's been issued by somebody who's licensed that lays out what's going to go on. There's a huge reason in order to take a look at vintage. Why? Because basically you're paying 24 cents on the dollar for vintage versus the overall condo market. What do you say to that, Jenny?
Yeah, I think it makes sense. What are you saying? It makes sense.
Okay. Now, let's continue on with the pricing. When we look at the average price per door, I mentioned $1.9 million in Sunny Isles Beach. What did they trade for during the winter? Those 320 units, what did they trade for on average? $1.6 million. $1.6 million. The ask today, 1.9. We have a little rule that we use. Effectively, it's like a bid ask. What's the difference between what they're asking and what they're trading for? So we normally say 20% should be the spread, and then the two parties split the difference, and there's a 10% premium paid. So we say if the pricing is, if the asking price is within 20% of what the average sales price is, you're going to split the difference, and that typically means that is a seller willing to negotiate. Now, when it's over 20%, it means that the seller thinks they have gold, and if you want it, you're going to pay a premium. So the percentage difference in Sunny Isles Beach, about 15% difference. Now, when that number gets shrunk even more, it shows you that the seller might be doing anything to get out. And if we look at the vintage units in Sunny Isles Beach, we're going to see that the average asking price is about just under $455 a door, $455,000. The average transaction price in the winter was $450,000. So about a 1% spread. So when I look at this, I say, we might start to see a sell-off. So then I look at pending sales. The average pending sale price today on vintage in Sunny Isles Beach, $343 a door. $343. Now we don't know what's going to trade at, because that's the price. That's the average when it went under contract. You got 31 pending sales right now in Sunny Isles Beach. $343 a door, average ask in vintage. $454 a door, average transaction at the end of winter. $450 a door. So this might be a sign that we're starting to see the sell-off begin. Any reaction to that, Jenny?
Yes. Yeah, I think that might be fueled by a lot of people. They cannot afford the special assessments and all these the studies and the future reserves, because not all of them are being, that they still have a little time for that. Not all of them are on the deadline. And so I think a lot of people is just going to get out of the market and go somewhere else, either another state or even out of the country, because they really cannot afford to live like that with the fixed income.
Got it. Real quick, Jenny, because I want to go to rental market next, and we have a little time left. But let me just give you price per square foot for anybody playing at home. Average ask in Sunny Isles Beach today, $846 a foot. What did they trade for in winter? $758 a foot, about a 12% difference. Again, under 20% suggests sellers willing to deal in Sunny Isles Beach. What are they on the vintage side? Average ask, $428 a foot. What do they trade for in the winter? $364 a foot, about an 18% spread. So again, sellers are willing to negotiate based on what we're seeing from the data. And then finally, what is the buyer's sentiment? What are the buyers thinking about this market? Well, we know from our index, not a lot is going on. But let's look at days on market. That's a good tell as to what's going on with buyer interest. Are they interested? Are they queuing up Are they bum rushing and throwing out all kinds of offers, or are they basically sitting on the sidelines and laughing at the listing broker who's holding all these open houses and doing everything they're doing and nobody's showing up? So what are they doing? Let's take a look at the days on market. So days on market right now, all the condos in Sunny Isles, they've been on the market an average 176 days and counting. So we're talking 6 months. They've been sitting on the market and they haven't traded. Now in the winter, the units that traded took them 131 days, the whole process. We'll put it for sale. We'll get it under contract. We'll do the due diligence. We'll close 131 days during the winter. Placed on the market today, 176. Jenny, what can you take away from that? What does that suggest to you? Prices are too high, or maybe there's not enough buyer interest? What would be your take as somebody who just drove up to Sunny Isles Beach and you did a cursory tour around to get kind of, get some insight?
Mm-hmm. It's a combination of both, I think. It's just like the price combined with people holding off, waiting for something to happen. It's like, again, we're in the eyes of the storm. And when you have buyers, because we have buyers that are interested in vintage, but they want a deeper discount. Why? Because they're taking the risk. They know that if they have, even if the seller is paying for the special assessments that there are today, they know for the fact, and these are investors that are, they know, they have done this before. They know that in 2 years, they're going to have a huge assessment again. Because what happens with these buildings that they're gonna need more special assessment throughout the time that you are holding this asset.
Yeah, it doesn't stop at one.
So,
it's not one and done. It's because, again, anybody who's done construction, or maybe you've done rehab, maybe you've owned real estate, typically what happens is it costs twice as much as you anticipate, and it takes 3 times as long. So that first special assessment, that's not the end of it, because once they start doing work, the chances are they find something. Remember that piece I put out within the last month or so? There was a project, or there is a project in Clearwater on the west coast of Florida. They went through their inspection. They funded it. They were on the process, and lo and behold, one day they noticed one of the primary support beams, it's splintered at the bottom. They got everybody out like ASAP. They called 911. The firefighters showed up. The police showed up. They had a special response team that showed up. They had steel poles trying to jimmy the thing up. So even if you're doing the right thing, you just don't know how this stuff's going to play out, especially on oceanfront type of product.
Yes.
So that would be the concern if you're buying something that is a vintage, which is 30 years or more, even with a report signed by a licensed architect or a licensed engineer and everything laid out. So that's sort of the give take. But if you are willing to do it, you're looking at, you're paying 24 cents on the dollar versus the overall Sunny Isles Beach marketplace if you look at the latest data. So that's the push-pull.
Yes. So you need two type of investors. Some of them are going to go for the trophy unit that they dream of. They all put all this money together and do that. And then you have one that is going to try to taste the water, but in order to taste the water, they need certain price range in order to get in and say, hey, yeah, maybe this market, I want to buy more than one unit. And once the paralysis by analysis go away, then we're going to have more activity. But I think it's going to be slow. So
that makes sense.
Definitely.
Yeah, that makes sense. I will say one other factor that might be contributing to the Sunny Isles situation. There was a report that came out in December of 2024 done by the University of Miami. And the report was a result of the Surfside collapse. The university research team took a look at buildings that were sinking. My words, not theirs. They use a scientific term I can never pronounce. So I'm just going to call it sinking. I'm not an engineer. Check with your engineer. Check with your attorney. Basically, they came out with a list of 35 towers that are sinking on the Barrier Island, many of which are located in Sunny Isles Beach. So that's something to take a look at if you are on the Sunny Isles Beach market. Jenny, I won't ask you to say anything about it because I don't know. I don't want to put you in that kind of situation, but basically Miami Herald story, we'll talk about it. And the industry immediately came out, and developers as well as architects went on TV and they talked to the press and they said, it's normal. It always sinks. The University of Miami study said, yeah, we know it always sinks, but these are sinking more than should be expected. So if you are buying a condo in Sunny Isles Beach, make sure and it's newer, make sure you take a look at this particular study done by the University of Miami. Now, Jenny, as we wrap up this podcast, this Miami Condo Mondays, remember every Monday, 4 o'clock Eastern Standard Time, Don't listen to 1980s music while you're stuck in traffic. Turn off that other podcast. Put us on because we're going to talk straight about what's going on in the condo market. Mondays, 4 o'clock. Probably most holidays too, I would imagine. But we'll keep you up to date if something changes there. Jenny, let's get into my 1% rule and let's talk about rents. Everybody knows I love 1%. Everybody in the industry hates 1% rule. So everybody has a peace of mind. $1.9 million a door is what the average ask is for a condo in Sunny Isles. A vintage condo average ask is let's call it $455,000 a door. So that means the average condo in Sunny Isles, you need to get 18 grand, basically 19 grand a month for the 1% rule. And if you're buying vintage, you're going to need to get about $4,500 a month rent just to give us peace of mind. The units that traded for $1.6 million. So you need between $16,000 and $19,000 on the rent.
Mm-hmm.
And the vintage side, they traded at, call it $450,000. So about $4,500 a month of rent for vintage and about $16,000 to $19,000 for an overall condo. So let me hit you with the rental data, Jenny. So here's what we got going on at Sunny Isles Beach today. 874 rentals, 874 are on the market. The median ask, $5,200 a month. That means places are worth $520,000 based on the rent. From my perspective, those places have been on the market for 88 days and counting without getting a tenant. There's currently 8.8 months of supply. 6 months is equilibrium, even for the rental market. Less than 6 months means the landlord has the advantage. More than 6 months means the tenant has the advantage. So we got roughly 9 months of supply on the market in Sunny Isles Beach. We got 874 units for rent. During the winter, about 100 lease per month or so. Median asking price, $5,200. The transaction price during the winter, $3,500. So they're asking $52,000 and they transacted during the winter. Remember, peak time, beautiful weather, heavy event going on, Art Basel, blah, 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 blah. $3,500 is what they were getting on their median rent, which means condos in Sunny Isles are worth between $520,000 and $350,000 using the 1% rule. Jenny, tell me why I'm wrong.
You're not.
So you're agreeing with me.
No, I agree. Like the 1%, we're not talking about the 1%, but we're talking about what is happening, and this is what is happening. And actually, the rents are. I think one of the issues or something that may impact the numbers is that a lot of people is staying where they were. Some of the landlords are keeping the tenants for 6-7 years. So these tenants are paying lower rents than everybody else that is being listed. And it just occurred to me because I've seen a lot of that. Like they raise the rent a little bit, but not to the market price. So this unit is off the market. So it's nothing happening in that. I think that probably influences the stats where the people is actually paying less that they should be paying compared with the prices right now.
Got it. And remember if you when we were talking about pricing per condos, remember I mentioned typically you see a 20% spread between it's not really, but for simplicity's sake, the bid and the ask, what somebody's offering and what it actually trades for. 20%, and then you normally split the difference. And I said if it's north of 20%, that means the seller thinks they have gold, that if you want it, you're gonna, you better bend the knee and pay them what they want. On the rental side, and this is interesting, the median asking price for a rental in Sunny Isles Beach, 49% more than the rents that they're achieving on a median basis. To me, that says somebody overpaid for a condo. Somebody's got to try to get some cash in, and they're shooting for the stars, even though they know they're probably not going to pencil out. 49% is very confident with the fact that there's 9 months of supply roughly on the market. You think I'm reading that right? Or maybe is there a different explanation for the huge difference, 49% difference between the asking price and what places rented for during the winter buying season of November through April?
I think what is happening is because remember, like 2 years ago, everything was moving so fast. that the people were staying with the prices and paying whatever it was. And I think because the prices, the places are staying vacant for a long time, people are negotiating. That means that people is saying, listen, I pay you a whole year, for example, and instead of $4,000, I'm going to pay you 3,000. So that's a huge difference in the price. It might be happening. Or people say, I'm super qualified, I'm going to give you 4 months, but, negotiating in a way that actually the landlord say, yes, let's do it because I cannot have this place empty for so long. Vacancies are really bad for landlords.
Well, and that's what I was going to say, Jenny, because these places that are for rent in Sunny Isles Beach, remember, 874 for rent. They've been on the market 88 days and counting. During the winter, the places that rented, 69 days. So that's still, even when they rented, they were vacant 2 months. So even if you're holding out for a high price, you lost 2 months of rent. Now, 88 days, which is effectively 3 months and counting. And who's to say when you're actually getting a tenant in there? So again, rather than being crazy with your ask, why not get somebody in the door? You're going to subsidize them anyways because you're upside down with a $5,200 a month of rent when the average asking price is 1.9 a door. I mean, maybe that covers your maintenance fee. Sure as hell not going to cover your property taxes. At 2% at $1.9 million, it's not covering the property taxes. So, sometimes people have to be a little bit more logical and not have this psychological number in their head that they got to achieve it. And if they don't achieve it, then, there's something wrong. I'm sure you see that, Jenny, where people have a number in their head that's not reflective of market conditions.
Yes. And when you have a client, which we do, and when we have to rent the property, we explain how bad is vacancy for them. How in 2 or 3 months, that price that you wanted is gone now. You're going to be twice down because it's not only the time that you were waiting for the price, but now you had to wait another 3 months to rent the place. So you just have to talk to your landlords, to your clients. If you are listing for rent, say, listen, prices are going down. Go and get Peter Saluski's data, and show the charts. They would definitely see it. Numbers don't lie. Numbers are the only thing that don't lie. Actually, well, depends on who's doing the stats. Peter, that's good stats. No, truly, this is true. But he doesn't have an agenda on either way, buyers or sellers. So it's accurate. I'm giving you praise, Peter, because this is true. I rely on that, and historically, it's been an advantage for our buyers or sellers or landlords or even renters.
Now, Jenny, my last question before we wrap up this podcast, and thanks everybody for tuning in. Remember, every Monday, 4 o'clock to 5 o'clock Eastern Standard Time, and we make a copy, a recording. Copy of the recording will be available later today or possibly even tomorrow. But Jenny, my last question. So you took a ride up to Sunny Isles Beach. You've been playing in the Sunny Isles Beach market for quite some time, including going back to the Great Recession years when you were putting clients in units at pennies on the dollar. I don't know, 30 cents on the dollar or so. What's your overall vibe of that marketplace? Given the fact that the index is flashing warning signs that it's the worst market, given the fact that we're looking at supply, where it's seriously in a buyer's market, the rental game is serious in a buyer's market for Sunny Isles Beach. However, it's got a bunch of name brand product in terms of condos. It's also on the ocean. It's also centrally located between Miami and Fort Lauderdale. So, Jen, what's your takeaway as somebody who's played and monitored the Sunny Isles Beach market for decades? Where do you sort of see it going from here?
Yeah, no, as I said, you have to take in account, separate the submarkets in the same area, luxury on the sun, and you did a good job, separating the vintage with the no vintage for this particular podcast. But yes, I mean, you have to know that if you're buying luxury, most of the time, the owners of luxury, and I'm talking because I had customers that had done that, they don't rent these places. They don't want anybody to sleep in their beds. They use it 2-3 months of the year, and they're happy with that. So those places never go for. You don't see that huge rental market on those super luxury. So it's either super luxury or you have to try to go do your due diligence as far as what you can expect for a building that is vintage, and you can actually go and see, or take somebody with you. Take an engineer. Take somebody that really can see the trends the same way that we can see it for our market in numbers. Somebody that can actually go and see, say, hey, maybe if this is not, it's gonna be a one-time assessment that the seller is paying, and then probably you're gonna be good for the next 5 years before you resell this condo. So do the work. Go to Peter's Tours. Do the homework, because it's not anymore like looking in the computer photos. It's not. Trust me, it's not like that. If you do that, you're gonna be really disappointed.
Jenny, my final question, and I told you I'm going to be asking you that at the end of every one of our Miami Condo Mondays. Right now, your outlook on the condo market, it could be Sunny Isles Beach, it could be overall. Are you a bull with the horns going up and you're positive? Are you a bear where you're clawing down? Or are you on the sidelines because you don't know what the hell's going to happen next? So how are you doing this week on June the 9th in the year 2025?
Are you asking me for Sunny Isles or in general?
Whatever your vibe is. This is I want to measure your confidence in the overall condo market in South Florida and or Sunny Isles, whatever you want to address.
Okay, I think this week, because the numbers are talking, I'm getting a little bit like.
So you're becoming the bear and you're clawing down. Ah.
Yeah.
So you're the oso in Spanish.
I think so. Yes, exactly.
Okay.
Yeah.
And we'll have to see what comes out next week. That's Jenny Huerta. She is a real estate broker. She's a former lender. She's been in the real estate game for north of 20 years. She actually got on the ground down here in South Florida in the early 1990s. She beat me by a year. So check out her website, cvrrealty.com, cvrrealty.com. You also see her nameplate at the bottom of the screen. If you're watching, if you're listening on audio, Jenny Huerta, cvrrealty.com. I'm Peter Zalewski. I'm the founder of the Miami Condo Investing Club. Check out our website, miamicondo.club. If you're a DIY or yourself, you don't want to work with a realtor, we'll give you all kind of data related and analysis related to the condo market. We also do a monthly virtual meeting where we go over a lot of the data that we collect. It's exclusive for club members. We have our meeting this Wednesday from noon till 1:15 or so. We do it on the second Wednesday of every month. So, and also too, I got a tour coming up. I'm doing a tour on Saturday of Greater Downtown Miami. We'll be going through the Brickell Avenue area. We'll give you a list of all the condos. We'll give you all the stats, the ratios. We'll also teach you how to analyze condo buildings. It's something that doesn't necessarily apply only to Greater Downtown Miami. You can use it for all buildings in and around the South Florida area. So if you're interested in that, I'd encourage you to check it out. That you can get information at miamicondoclub.eventbrite.com, miamicondoclub.eventbrite.com, or go to miamicondo.club. I'm Peter Zalewski. That's Jenny Huerta. Thank you for tuning in. We will see you next Monday at 4 o'clock Eastern Standard Time. Take care, everybody. Happy Monday. Ciao, ciao.
Happy Monday. See you next time.
Ciao.
Bye.